What's up, mortgage coach community? I am sitting down with Sosi Avila. What's up, Sosi?
What's up, Dave?
Dude, I love you. Are such a gift in this community. Always appreciate getting in front of you, and I always come out of the conversation more energized and more fired up.
I love it, man. Yeah, it's always fun to be on here. It's still sometimes hard to believe just knowing that when I first started, I saw so many of these videos and now I get to be on them. It's pretty humbling, man, for sure.
Well, it's pretty amazing that I get it when you were new and you were coming up, how many of these you watch, but you still watch a lot of these. I mean, I think you closed over 70 million last year, and you're killing it. And it seems like you still consume a lot of the Mortgage Coach YouTube content.
Yeah, you know, if I see guys like Josh Metal continue to watch this and go, I learned something almost every time, then there's no reason not to watch.
Well, I think that leaders are learners, and I still consume an hour worth of content every day. And I try to create an hour's of content every day. And I just think it's a success rhythm and habit that I hope you do forever. So,
heck yeah.
So for anyone listening to this conversation came about because earlier last week, I interviewed Dave Gallegos, and it was how Dave Gallegos is training, or how he's fast tracking the training and success of new loan officers, and highly recommend you guys check it out. He's bringing new loan officers who are self-sourced, referral-based loan officers. And he says, hey, this is what I do in the first 30 days. This is what I do in the next 30 days. This is my expectation for the first year. And I think you chimed in, like you were commenting in chat during that interview, and then you and I had a conversation, I don't know if it was text, and you're like, Dave, I'm doing some interesting things. And I said, well, let's talk about it. Is that how you remember it?
Yeah, to a degree. I know that it kind of sparked off even some of the connections you've been able to just lead us towards with just holistic planning, liability managers. And so I was just excited to even share with you, hey, what you showed us, we've actually incorporated into training, and it's producing some pretty great results. So I was excited to talk about that.
And I'm also excited. Let's try to weave in the liability advisor. Sosi is going through the certified liability advisor program, CLA, certified liability advisor. And so let's try to weave that in, and then let's book in this thing. When we think of the sandbox, it's like we're training a modern mortgage advisor, and you're a millennial, and it's like you're 5 years in this. So it's like, hey, how is the new guy who's now taking a seat at the mentor's desk and the training's desk, how is he training new loan officers? How's that sound?
Yeah, I love that. That would be a great topic.
So let's unpack it. So walk us through what you're doing, kind of describe the position, what you're looking for in the people that you're bringing into your training and your mentorship, and then let's unpack your checklist.
Yeah, I feel like this is an interesting conversation because from day one, I always worked and created my business in a way to scale it. I think I've used this illustration before with a mentor of mine. When I first came in the industry, the guy was doing 368 houses a year. He was a real estate agent in Orange County. And he was just a killer. And he always taught me, when you look at your business, make sure you don't make the mistake a lot of mom and pop restaurants make, where they dish out really great meals, but they never write a recipe down so that it could be scaled and grown. And so ever since day one, everything I've done is written down. All the talking points on my sales conversations have been written down. All the steps that I've done written down, and then they get erased and modified and rewritten and all that great stuff as we've been continuing to grow. And so that concept, right, of being able to teach people has been a huge conviction of mine. And interestingly enough, as well, as I continue to grow and be able to have so much success, I've been asked a lot, like, Sosi, how are you growing so fast? How did you grow from this to this really within 4 years, now going on your fifth? What's the secret? And there's obviously a lot of variables to it, but I would say the one piece that was the most crucial for me has been finding that talent and honing in that skill to not just learn, but teach people what you learned. Right? Like when I look at these high real estate professionals that I get to work alongside of, or I get to be in networking groups with, the thing I see a lot is a lot of great producers who have learned how to make success kind of instinct, But the disconnect that sometimes takes place is them not learning how to communicate that to staff members, teammates, and even clients in some ways, both on the realtor and the lending side. And so for me, this is a fun topic. I feel like it's been the key and pinnacle of my success, is being able to always stay learning and then always remember how to teach others through what you learned as well. What do you want me to dive into, Dave?
So one thing I've noticed now, and you and I've got to know each other a lot better. I know it's been over a year. I don't know if it's been quite 2 years, but one of the things that stood out is that you are a learner. You watch the Mortgage Coach content. You were mentored by Ryan Grant, Josh Metal, but you always make it yours. So you'll take these principles from other folks and then you make them your authentic content. And so I'm really looking forward to seeing how are you doing that? Because it's great that you're documenting it now, but you want to make sure that as you're mentoring new people, not only are they learning the Sosi way, they're like, okay, how do I make it mine? So I'm going to try to pull that out.
Yeah.
Well, oh, you were going to say something.
Yeah, I was going to say, when I was in college, right, I went to college for ministry. And so that's where I got my degree. That's where I ended up coming out as a pastor, all that stuff. And one of the things that I really loved being taught, and I believe I've shared this on this platform before too, but I'll reshare, is that when we looked at commentators on the Bible, historical texts, when we looked at scholars, the objective of looking at their writings was identifying that these individuals went as far as they could to peek into the goodness and the glories of God, right? From our religious view. And our job as students was to go and stand on their shoulders so we can see a little bit further than they did. And so that mentality of being able to see mentors and other individuals, not as a challenge to your success, but see them as a means and opportunity to even grow in more success, that is the first step in the mentality. And so that'll dovetail me into my training that I do for our teammates, is being able to identify for these teammates for themselves the right mentality to have, right? And that's going to be a two-step process. The first step is being able to make sure that you're finding the right person to be in the right role, right? That's huge. Some people want to be number one. Some people don't want to be number one, and they're extremely happy being number two. And probably speaking in our context of high performing loan officers, maybe many of you guys struggled like I did when I first came out and be like, no one wants to be number two. Like, that's just not what anybody does, because all I know is want to be number one. But there's a lot of people who want to be number two, and thank God for them, because they make everything else that they touch better, And so being able to find the personality type of your teammates and being able to find a role that puts them in the right place to have the right results take place, that's imperative. So that's the first step. The second step.
I want to take a break before we jump into the second step, because I want to talk to, I'm going to let Sosi share. And then if you're a new loan officer and you're hearing that, I hope you took notes. I hope you thought about that. And I also don't want you to just go back like noted. I want you to kind of reflect, where am I? Am I being my authentic self? Do I know what my personal goals are? Do I know what gives me energy and what sucks my energy? So you need to start figuring that out now. And for all you mentors of new loan officers, a lot of mentors will come in and just say, hey, I've got this winning recipe book. Come in and just do it exactly the way I do it. And there is a standard. And there are some things like, if a total cost analysis for every consumer is a standard, well, everybody in your team needs to do that. But there are some best practices, and I think it's important to note for all you leaders out there that are mentoring people, that you want to have systems and processes, but you want people to find their own way. And are you doing that? So Sosi, let's unpack your playbook and your checklist and the things that you're doing to help new loan officers.
Yeah, that first part, it's very discovery based, right? Asking the right questions, doing quarterly reviews. If you don't do a quarterly review, my quarterly review, I don't mean, checking in, going, did you do well or not, but being able to thoughtfully create questions that provoke conversation between you and your teammates so that you can identify, one, for yourself, are you being the right resource for them? But again, more than anything, right? We have to learn, but not just learn how to teach. What we're also doing through those quarterly reviews is giving these individuals the ability and the platform to identify for themselves what they're thinking, what their own goals are, right? No one has this stuff overnight. And so the right mentorship, coaching, and training for people to just even learn how to articulate what they're feeling or even identify what they're feeling, in my opinion, is going to make a difference between a right hand and a placeholder who'll probably leave, right? And so that's the first concept. That second concept, it's all about vision, right? Again, the two parts of the mentality. The second part is all about vision and technique. And so both of those are going to go into kind of a list that I was sharing with you, Dave, of the requirements that I have my teammates go through. One of them is Zinix, right? When you first come on, I do my own Sosi version of crash course for mortgages, trainings that I even do for other real estate agents, like Mortgage 101, what's the basics of DTI, just pretty much a matrix, right? And then from a matrix, I go into the details of what make up PITIAs. And in some of our counties, we've added S in there for solar, just because of the different areas that we need on the mortgage side. But dovetailing that, we also incorporated Zinix. Zinix has been phenomenal, right? It's not gonna give one person everything, but what it does is it exposes somebody to a formal way of learning on all categories of mortgage, which in my mind, right, if we're trying to speed up these guys' trainings, at bats is how we all got trained. Hey, go be thrown into the deep parts of the water, see if you swim, and then let's go. That works. But when you complement that with an actual formal education through even a platform like Zinix, I have personally seen a massive difference between those that I did have go through the program and those that I didn't have go through the program, just even knowing basics.
And
So that's one.
Also, not only who gets trained better, but it's about speed, and it's about speed to confidence. So I'm a big fan. I've interviewed Casey a number of times, Casey Cunningham. If you're a new loan officer and you don't know what Zinix is, go to zinix.com. We'll put a link down below. If you're a manager, Dave Gallegos uses them, Sosi uses them. It's the best training out there for new loan officers. Make sure you go check it out, and there'll be a link down below.
Yeah, that's one of the 5 things that I would say that we have found keys now to any of our new trainers or the new people we're training. And as we talk through all these, remember, there's going to be a vision and a technique aspect to it. The second category would be mortgage coach, right? Not only do we want them to listen to the mortgage coach playlist, the new LO mortgage coach playlist that now exposes them to way of thinking and way of presenting, right? But in addition to that, I also give them homework. So like, for example, one of my newest team members, I have him working on 5 different case studies right now. And when he's going through these case studies, what I'm trying to teach him is how to teach from the tactical way of a high producing loan officer, right? If he's exposed to how loans work in comparison to another, then he can do what Mortgage Coach has been created to do, give people advice, right? Mortgage Coach is a technological catalyst to be able to provide people with information to make a good decision. So for my guys, right? Like, for example, his first scenario that he's working on right now is 760 FICO score, $500,000 purchase price, 20% down, and showing me what it looked like in 2018 to make this purchase. So I show him how to find historical rates. I show him what that house would have been like there, and then what that looks like now with today's rates at the same down, and then what that would look like with a 3.69% appreciation rate in 2024 and 1% higher rate. That now exposes when he does the homework and he puts all this together and he can discover for himself, holy crap, if you wait longer, you pay more, right? What did I just teach the guy? I just taught him not just how to get I just didn't give him the fish of the cost of waiting. I taught him how to go fishing for the cost of waiting and believe in the fishing experience himself so that he can teach that to the clients and influence them appropriately.
So think about it, guys. There's so many loan officers who've been doing this for over a decade that can't do that, aren't comfortable doing that, don't know why to do that. And if you're a new loan officer, maybe not your first month, but by your second month, if you can do that, that is a sense of confidence. Remember, the more you know, the more confident you become. Yeah. The more you know and the more skills you have beyond what your competition can do, the more confident you are and the better armed you are to win against competition. What are a few of the other case studies, things that you're teaching?
One of the other ones that I have him doing is he's So, and I would encourage any manager or person trying to train others, or if you're just trying to give yourself homework to train yourself, make sure you identify your target and your most common client, right? Like we have a lot of clients who are sellers or buyers, not wanting to make a move because they believe something's going to change in the near future. So being able to show them that with that first case study was crucial. The second case study is our first time home buyer, right? And sometimes they have a little bit of a challenge with FICO score and sometimes they don't. So in my discovery call that I have this teammate doing, where he has to identify within the first 15 minutes if this is a deal, not a deal, what kind of deal is it, right? He has to identify all those things very quickly. Another case study I'm having him do is, again, another $500,000 purchase price, but option 1 on the TCA, 3.5% down, FHA 680 FICO score. Option 2, same down payment, same loan type, 640 FICO score. Option 3 is a 3% down conventional with the 720 FICO score. And option 4 is the same conventional scenario, but with the 780. Because I want him to start thinking through a concept called EPR, right? And this is something that from Todd, we're able to take away from his training, which we'll talk on one of the points here as well. But EPR, right? Not just what's your interest rate, what's your APR, but what's your effective percentage rate, right? What are you actually paying for the loan you're borrowing? This is where now you compare interest rate summed with mortgage insurance rate as what the true rate is. And so being able to show him how to think through FICO scores right away, what kind of loan type can they fit into? And why is it better than this loan type, right? When you hear that somebody has a 640 FICO score and they're going 3.5% down, but they're tight on down payment, why wouldn't a 3% be better, right? And so trying to show them just even from a cost and cents perspective why it could potentially be better is the vision of this case study for him. So that's example 2.
Any other cases? Because I know you've got 5 things you want to share.
Yeah.
So I want to be thoughtful of your time, but I'm also curious, hey, what case studies are you giving them? So
yeah. So I have 5 scenarios that he's working on right now that he has to have done within about the next month and a half. It's pretty much one a week. And so the third one is $500,000 purchase price, 5% down with monthly mortgage insurance, 10% down with monthly mortgage insurance, 10% down with single premium finance mortgage insurance, and 20% down. This now shows him now the concept of monthly, single, and do I need more down to actually change my monthly payment enough? Right. So that's 3. And this is an individual who's been with me for 3 months and he's already at bat with all this stuff. He's having client conversations that you would think he's been in it for 2 years. Scenario 4.
Loan officers that have been doing it for 10 years.
In some cases, sadly. And then scenario 4 is, again, $500,000 purchase price. Let me see. That one actually didn't copyright, so I can't read that one enough. So I'll go to the 5th one. 5th scenario, 5% down conventional, 720 FICO, condo, $600,000. 5% down FHA 720 condo, $600,000 of a purchase price. And so I want him to now start also seeing the adjustments that come with the condos, especially between our different loan programs. And then 10% down conventional single premium finance, 550 purchase price, same scenario, but 750 purchase price. So you can see even what the differences are between a conforming and a high balance. And so I'm just trying to give him opportunities to learn tactical technique as he continues to couple that with more at-bats and more client conversations.
So one thing I want to give whether you're a top producer, you're a leader here, make sure you're thoughtful of what's the role that they're going to have in Sosi's position. He's trying to hire people that can help. They're getting leads. And he's like, what are the leads that they're going to have that they need to be trained to do? When I interviewed Dave Gallegos, he's trying to train them to generate leads. So if you're hiring someone who's self-sourced and within 60 days, they need to be bringing in their own leads and loans, make sure you include a rep versus own. Because if you listen to the Dave Gallegos script, he's telling them all to, hey, build a list of 150. Yeah. I won't even hire you till you've got a list of 150 people you're going to call. And by the end of the first month, you need to have 300, and you're going to call renters and say, hey, will you help me? I want to practice my rent versus own analysis on you. And then you're going to call homeowners and you're going to say, hey, I want to practice my move up analysis. So I think it's important that if you're listening to this, think of the 3 to 5 strategies that support you as a leader. if they're going to go out and get self-source business, they need to be expert at a strategy for first-time home buyers. They need to be expert at a strategy for move-up buyers, where they're out there looking for move-ups. But obviously those are the Sosi 5. So let's, if you got anything else to cover on how you're training on Mortgage Coach, bring it. But I want to get to all 5. So I want to get to number 3 pretty quick here.
Yeah, and I would just throw out there too, the concept of first-time home seller is something that we've come across a lot, right? And that is one that 100%. Yeah, like, I mean, when you think about clients who have not spoken with a mortgage coach before when they bought their first house, I think you would identify right there and then how much more of a need they have and how much harder it is to be a first-time home seller than a first-time home buyer, especially with the given marketplace. And so it's been really neat to be able to train the team on how to think with first-time home sellers, especially in a cost of waiting scenario. Because if anybody needs it the most, I would actually say they need it more, because in about 3 years, they're going to be chained to their house and prison to their interest rate. So trying to educate them to be able to get out of that bondage earlier than later is definitely a big goal of ours right now in Mission.
So guys, pause right here. Make sure you re-listen to that. Chained to their house and bond. Wait, I can't. What was the language you used just now?
Bondage.
And bondage by interest rates. So, and I have not heard that strategy, a very specific marketing and sales tactic for a first-time seller. So that would be another assignment to everyone. Go through your database and figure out who are your first-time home sellers. And remember, Sosi said something else. If they didn't work with a mortgage coach, you've got just an opportunity to come in and go, be the hero. Hey, first-time home buyer, you know, when you got into debt and you made this decision, you got this fee worksheet, you're a seller now. I'm going to help you make an informed decision on when to move up, how to move up, how picking the right mortgage strategy is infinitely more important than picking the right interest rate. So really good point, Sosi.
And before we move on from Mortgage Coach, I will just give the community one more encouragement. I heard Josh Metal say this the other day too, which I realized at that point that I wasn't lonely, which is kind of funny how we always think that we're the only ones experiencing it, so we shy away from saying stuff. But one of the things he talked about was like how when he finishes creating his options, he loves when he gets blown away at what he thought the best option would be. Then the numbers show that something else was a better option. Right. And so I would just say that the principle there that really encourages me and that I would encourage you guys with is always press into testing the scenarios. Right. I can't tell you how many times I've been in the hot seat where they're like, so if I take this down payment and put in cryptocurrency and I pay less rent, but I add the difference of what I'd be paying in the mortgage into the cryptocurrency or this investment account, which one's better for me, the house or not? And I was like, about to crap myself because I didn't know what the heck the result would be. But I was like, well, let's just try it. It's worked every other time. And then when you see that you're using, let's say 50 grand to leverage an over $500,000 asset. And in this other scenario, all you're leveraging is 50 grand. Then you can see truly in the next 5 years, which one's going to be the most profitable for them. Right. And in the same way with the seller piece, I just had a seller conversation on Saturday with a seller who's done this plenty of times. They knew exactly what they were doing, but they identified for themselves now coming into their retirement that they're going to have to move. And they're scared of moving because the house that they want for their family is, you know, much higher than what they ever thought they would buy. So there's that sticker shock that's affecting them, right? And so what I did is I walked them through from a consultative perspective. What if appreciation happened? Worst case, last 8 years before COVID, 3.69%. Here's your monthly payment if interest rates go lower than what you're expecting them to be at in 3 years. And then playing devil's advocate, let's say we do have a drop in prices after year 2 or after year 3. Well, now that we've seen appreciation grow, if it drops by 15% and rates are here, here's now your monthly payment. In both of those scenarios, they saw that their monthly payment would be much more than right now moving and buying. And they walked away very different. So being able to press into those are great. I love the tool.
So you reminded me of a recent interview with Tom Sherman, who recently graduated as a certified liability advisor, and he had his whole branch become CLAs.
Yeah.
And make sure you guys listen to this interview. I'm gonna put a link down below. It was called Becoming a Certified Liability Advisor by Tom Sherman. And Tom is a big producer. He's been doing this 20 plus years. I can't remember if it was 130 million he did last year or 140, but I mean, significant volume. And he was talking about being curious, being humble, and always helping people with purchases look at options. And it happens a lot where people are like, oh, what if you put lesser amount down, you invested the difference, you put less down, you had a bigger mortgage. What's going to be better over the next 3 to 5 years? So check that out. So Sosi, what's number 3? Number 1 is ZX. Number 2 is
Mortgage
not
Coach.
only use Mortgage Coach, but listen to the videos. What's number 3?
Number 3 would be our Art of Homeownership, the platform that Ryan was able to spearhead in creating. I will say, whether I would have worked with Ryan or not, one thing I'm confident of is that we would have crossed paths at some point, because the vision that is instilled through that program is it shows that we're cut from the same cloth, right? When you can start thinking about transactions in mortgages, not just being about the mortgage and not just being about helping that family with the house, but helping that family in all aspects of care, whether it's concierge of the house, whether it's the home bot tools, whether it's the right networking with financial advisors, CPAs, and estate plan attorneys that then turn around educational content to the consumer. And most of all, having a catch-all training, right? So all my teammates are always aware that one of the promises through the Art of Homeownership is this constant access to advice that is in some ways not expensive to them, but it was very expensive to us because of the thousands of dollars we've spent just on trainings, right? To be able to give them this access to information they can't get. I had a scenario just a week ago where a couple were splitting up and they're not married and they're trying to figure out how to divide the asset that they bought just as boyfriend and girlfriend. And the very words they said were, we keep Googling and it takes us only so far and we're lost and getting more and more confused. And after one sit down with me, completely different, right? Now there's clarity. Now the Google dots are connecting and being able to teach them what Google wasn't able to teach, and better yet, being able to clarify what Google confused, has been really, really great, especially through that tool of constant care, constant top of mind, and having tools that show that you're not just trying to sell, you're actually trying to produce for them an advantage that they should have as a homeowner that unfortunately other companies don't provide.
I love you said something beyond Google. We talk a lot about going beyond the transaction. When I think of the tenets of Art of Homeownership, I think of 2 tenets. I think 1, it's always about long-term. Ryan talks about, hey, I'm just getting started. Like this first loan that we do together, that's first base. My goal is over the course of your lifetime, help you make the smartest mortgage decisions possible and help you optimize whatever it is for you. Everybody's got a different goal, but whatever your goal is and the wealth you want to create with real estate and financial stewardship, I want to help you. So it's about that long-term perspective. That's why Mortgage Coach fits in, because we show the long-term cost of different loan options over time. But then, you mentioned HomeBot, and it's about delivering a service and a value beyond the transaction. And then you said something new. I've kind of heard this before, but I've never heard it the way you put it. You've got to help people go beyond Google. So if you are you're a mortgage professional and you're giving transactional stewardship and coaching, and you're teaching them and doing the same things they can do on Google, they can figure out their house payment on Google. Yeah. They can even figure out if they qualify on Google. I mean, Zillow, 100%. Redfin, better.com. I mean, it is full of what do you qualify, calculators, how to calculate your house payment. Guys, if you want to kill it, you're new in the business and you want to have extreme confidence and deliver extreme value, go beyond Google, go beyond the transaction. And of course, pretty much everything you've said so far helps you do that. But I love that. I'm going to put a link to Art of Homeownership down below. So check it out. So number 3, what's number 4?
All right. Really quick to just kind of rephrase some or reset why we're even talking about these 3, right? As a pastor, I always remember being taught that if the church revolved around you, you failed as a pastor. And I carried that concept into business and realized that as a business individual, if I'm actually creating a business that is scalable and can grow, if it fails because I'm not in the driver's seat, I failed as my definition of a business person. So everything here too, right? I think so many times we as the leaders start going and figuring this stuff out. We get all excited. And a huge error is you jump from level 1 to level 4 and your team's still at level 1. That's why these things are foundational for us, because if this is going to be the fabric that makes up the mission of Team Sosi, then all of us need to be very well exposed and trained in every single one of these categories, how to think different, right? Again, it's all vision and tactic coupled together in every single category. And so, yeah, so first was Zenix, then it was mortgage coach. And on the Zenix, to clarify too, as they're doing Zenix, we're simultaneously doing one-on-one trainings on what they learned, how that applies, so on and so forth. So Zenix, mortgage coach, art of homeownership. Fourth is the Borrower Smart University. Man, I will tell you, a lot of what is being taught are things that I had to go and learn by both mentorship through the different leaders that I've had in my life, and also personal life chasing the right financial advisor to teach me how to have a retirement plan that I feel bulletproof on. How to speak with estate planning. I had to go take these guys out for coffee, learn from them, because I didn't do formal school in this way. Right. And so my education has always been learning on the streets from those who have gone to schools. So I found the most educated individuals I could in each given field. And I just sat under them and studied and challenged and pushed back. And everything that I learned from that gave me the way of thinking that we've had and how we advise clients, Todd put in a stinking really simple course. Right. So the liability manager piece that he provides and the training he does through his Borrower Smart University, it is great. It's allowing me, and this is where I was speaking of that mistake other leaders make. I realize this mistake because as I've been going through the training with Todd, I have my whole sales team on there. And as we're going through it, I'm like, I pause one time when I'm seeing all their faces go, oh my gosh, I've never heard of the capital gains explained like that. I'm like, really? I just said this 2 days ago at a consult. Oh, that's right. Only one of you guys was on that consult. It's given us a platform to cover the foundations of a mortgage advisor, not how to be a good salesperson, how to, just structure a loan, but how to be a good mortgage advisor that considers the family's long-term impacts appropriately. That class has been so good. Some aspects, I'll admit, I was like, okay, he's defining money right now. I'm like, really? What is this going to be the point of? And then all of a sudden he hits you and you're like, oh my gosh, that was great. So it's been a really good course, but I would encourage people, make sure you start and finish it, because if you stop, you'll cut yourself short for sure.
So a couple of things on that, guys. So I'm a big advocate of this program. I've known Todd for over 20 years, and he is the Yoda of liability management. He
so good.
He sold his company back in the day, pre-meltdown, to mortgage.com. And then he helped both Charles Schwab and Ameriprise build their mortgage divisions. So he just really has a keen understanding of financial planning, mortgage planning, and it's the CLA. It is a $1,500 investment. Now there is a $500 mortgage coach discount. So I think it's MCVIP. So I'll put a link down below, but make sure you use the MCVIP and save the $500 on that. Real quick, have you finished it yet? Or how close are you?
Almost. We're halfway through.
And how much of a time investment is it? I just want to make sure.
We're committing about an hour twice a week.
So, and how many weeks do you think it's going to take you from start to finish?
Oh gosh, that's a great question. It's probably be like 2 to 3 months overall.
Oh, so it's multiple month commitment. So guys,
yeah,
think of it as like a college level course.
It is 100%.
Liability management, and you could do it in a month. I've looked at the content, gone through the content in detail. I think it's about a 6-week to 12-week program. I think any faster than 6 weeks and you're not getting everything you could out of it, and any more than 12 weeks. And I think you're probably not going to retain it as much. So I would plan somewhere between 6 and 12 weeks.
And just to share why it's going so long for us, right? Again, everything that he's presenting is a platform of conversation for us. And so it's been a little longer because we start talking about what clients we're working with that this could apply to, right? And even like challengeful thoughts of like, okay, is this interpretation of taxes how we're supposed to view it, blah, blah, right? Everything's about teaching these
Well, I
guys
think
how
that's
to
right,
learn
though.
it.
I think that's awesome.
Yeah,
Yeah,
it's been
in
really
fact,
fun.
let's make sure we do another interview when you finish it,
Yeah.
and let's talk about, okay, did you just do it exactly how you would do it? Or would you do it differently now that you've done it? And so let's do a whole debrief on that if you're cool with that. Sounds
Yeah,
like it's going to be
absolutely.
a month or two from
One
now.
of the things that's sad is seeing how there was, at least in my experience in lending, right? There was never a coaching, or there was never an education from a formal position on loans. And every time I asked somebody, how do I learn this? I usually got the response, you just kind of trial and error. You just keep swinging at the at bats, and sooner or later you'll figure it out, which means that, hey, you're going to have to like gamble with people's house purchases in order to figure this out if you don't go to a call center first, which is what I did. I didn't go to a call center. I went straight retail. And so I really created a lot of this with the intention of trying to give people shortcuts to what I had to learn the hard way.
Love it, Sosi. So number 5, what's number 5?
Give me a quick second there, Dave. My AirPod killed out there. What did you say?
Number 5, what is
Number 5.
number 5 strategy to fast track the training and success of modern mortgage professionals?
Yeah, I think this is a really good one to end off of, because if you guys heard the thing I keep saying has been a key to my success, the ability not just to learn, but to learn how to teach it, right? It's the same concept in regards to, it's great to learn all these things, but in order to teach it, you also have to learn the skill set of how to communicate it. And so if you don't have that, you can have the cure to cancer, and unfortunately, it won't have any effect. So Amplify is a necessity. For me, that's been just key. I have personally gone through Amplify. I am going to Amplify Live. I am going to do another Amplify event with some of our colleagues here in September. And then I have paid for my mortgage advisor to go through Amplify Virtual. My next one, as he continues to come up, he's going to be going to the virtual too, but all sales team members will be at Amplify Live as well. Just because if we can't be heard, you can't be heard.
Right.
Right? Like this is the basics of our industry. We have a message that we're trying to communicate it. And if you can't make it, if you can't communicate it, then realistically you have no message, in my opinion.
Dude, I love that. I didn't know where you were going to go. Like, we were having this call and it was, Dave, I loved what you did with David, and I got a few ideas, few reminders, validated a lot of what I was doing, but I'd love to share what I'm doing. And I love this because the thing I love about it is you leverage platforms. So, and I didn't know you were going to do that. So you leveraged 5 different platforms, but as I think about it, these are 5 amazing platforms. Zenix is an amazing basic training, as you said, formal training to learn the basics of mortgage coach. I mean, it is a community. If you want to be an advisor and you want to be your best as an advisor and coach to families, then, consuming our content, using our advice engine, delivering the total cost analysis.
It's the easiest way to paint vision, right? That's how I see mortgage coach. It's very easy to paint vision of what you're trying to communicate, because the numbers make the numbers itself is a canvas, right? That's what your
Beyond
TCA is.
the transaction. Again, you can use an LOS and fee worksheet to communicate a transaction, to communicate a client's dreams and goals with real estate. You need options. You need a mortgage coach. Art of home ownership. It's beyond Google. It's beyond the transaction. It includes training, and it includes platforms like House Happy, House Happy and HomeBot. Borrow Smart and Certified Liability Manager. That's when you're really learning how to be a ninja, how to break down people's student loans, credit card debt, how much money should they be putting down, tax simplifications. And then of course, now you got to amplify all that. You got to be the best communicator and the best advisor, which I've also been through the training on that. For the upcoming Amplify Live event, there's also a discount for that, guys. It's MC100. We'll put a link down below. So, dude, this has been a great great interview.
Yeah, thank you, man. I appreciate
Any
it.
other parting thoughts to either a new loan officer or someone that's just not where they want to be, or someone who's mentoring and leading a new loan officer? Any closing thoughts?
Yeah, you know, I guess to each one of those, right? Like if we're thinking about loan officer who's not happy or just not where they want to be, self-reflection is key, right? Like being able to identify, are you actually doing the role that returns for you the highest use of energy? And maybe that means you love talking to clients, but you hate chasing the deal. Go on a team. And it means you're on the team and you feel like, you know, there's just a hindrance for you. And hopefully you and your team lead can make a plan to have you exit, and they can give you training on how to go hunt it for yourself. And managers, and one of the things I see a lot of times is managers shortcut themselves, or they cut their legs from underneath them because they think that the only way somebody's going to be able to learn is if they have all the high production with it. But you know what? It's not always the case. I have learned from some people that I do 5-7 times more production than they've done. And they still taught me some really great things. And I have a lot of respect for them. And so being able to understand that education is not defined only by how much production you did as a team lead, but education can also be what you've exposed yourself to and how you take those principles to someone else. You know, that's great. So all encompassing, it's, you know, just enjoy wherever you're at, make sure you're in the right place, and wherever you are, be fully there. That's my biggest takeaway.
That is a closing thought, guys. Wherever you are, be fully there. For all you leaders, you've got 2 great calls. Dave Gallegos gave some great takeaways, some great ideas. Sosi crushed it. We will keep doing interviews like this. Remember, we do have a new loan officer playlist. So in our YouTube channel, about 3 or 4 playlists down, there's a playlist just for new loan officers. And I put those videos in the order that if one of my kids was getting in the mortgage business, and I've given the advice to a lot of friends who said, hey, Dave, my kid's getting into the business, create a playlist for me. Well, I did. It's called the New Loan Officer Playlist. Check it out. This call is a wrap. Please give us a like if you got value from this. Share it with your mortgage friends. And Sosi, I so appreciate you.
Later, brother. Peace.
Take care, man.